The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Wednesday. Today is Wednesday, right? Yes, it is. Hump Day. Hope you're having a great day out there. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN, 5 days a week from 3 to 4 Eastern, just ahead of the Tom O'Brien Show, which goes from 4 to 6 Eastern every day. 877-927-6648 is the phone number to use if you want to call me, talk to me about this market. If you can't listen to my show live, you can pick it up as a podcast on iTunes. Don't forget you can listen to all TFNN programming on your smartphone. Just plug those earbuds in, open up the smartphone browser, type in tfnn.mobi, and you can get the stream that way as well. Tiger TV is also viewable on your handheld device. If you want to watch Tiger TV with your PC, just go to tfnn.com, Channel 1. The show is carried live, and it is archived in Channel 13. All right, well, we got more selling in the major averages today. At last check, the NASDAQ Composite now 10.5% from its recent high of 31.97. Tech index down close to 1% today, 27 points to 28.56. Talking to a lot of technicians, talking about oversold indicators, that the market is due for a bounce here. I don't doubt that. I wouldn't be surprised to see a bounce, but trying to predict when a market's going to bounce is a tough game. What we know is that institutional selling persists in the major averages. So NASDAQ Composite having a rough session so far, trading near its session low. And in fact, if you look back over the past 6 declines for the NASDAQ Composite, starting all the way back here. Again, if you're watching in Tiger TV, you see a close right at the session low here, another close near the session low, close right there at the session low, close at session low, session low, session low. So this is obviously a market that is having a very difficult time attracting buyers. It's a market that's been under distribution since late September. My ultimate growth stocks model portfolio is now 100% cash, and I don't know if it's ever been like that. But in a market like this, my feeling is that I just don't have an edge. I really don't have an edge being short the market because even though we're in a downtrend and there's no signs of buying yet, we've just come down so much with the NASDAQ down 10.5% off its recent high. I suspect we're going to see a bounce pretty quickly, and some of these newly opened short positions, you could really get shaken out of those pretty quickly. So certainly doesn't make sense to be nibbling at long opportunities here either, with the trend still downward. So my game plan from here is fairly simple. If I'm going to get long this market, I'm going to wait for a market buy signal. Without the market buy signal, I'm not going to get long. And that buy signal is going to come first. We just need to see the first day of a rally attempt for the NASDAQ. That could come tomorrow, just any up day. And then on the fourth day or later of that rally attempt, we're going to look for a big percentage gain in higher volume. And if we get that, that's going to be the buy signal. We've had a couple of false starts here in the NASDAQ since late October, kind of day one of a rally attempt here. It falls on its face, no buy signal, no follow through, so nothing surprising there. We had earlier this week, or actually that was Friday, we had an up day for the market. The low gets undercut again, so we're still looking for day one of a rally attempt for the NASDAQ Composite. That really applies to all the major averages at this point. We'll take a look at the S&P 500. It is down 14.5 points, a little more than 1%, to 1350. It is now comfortably below its 200-day moving average. So looking for the first day of a rally attempt here, and then perhaps we get some follow-through. I'm in the camp that we're probably going to see some sort of tradable rally between now and the end of the year. Now, by tradable rally, that does not mean the start of a new bull market. It means that we're probably going to see some money come in from the sidelines between now and the end of the year. But I'm going to wait. If it happens, it's going to take a lot more than just an update from the market or a couple of updates from the market for me to believe that a new rally could be taking shape. So again, learn to recognize these buy signals, these confirmation of new uptrends during the 12 years or so I spent at Investors Business Daily. I know they've got a pretty good track record of working, but again, the real powerful ones happen, after an extended period of weakness. We're talking about a period of weakness that started in late September. NASDAQ about 10% off its high, S&P 500 about 8% off its recent high. So if we do get that buy signal, could just be a tradable rally, but sometimes still tradable rallies can deliver profit opportunities. So that's a look at the S&P 500 trading near its session low, and the Dow under a lot of pressure as well. This trend of kind of persistent selling near the end of the day is very typical of a market that is under distribution. You can see the Dow right now. You can see Tuesday and Wednesday closed near its session low. A couple times last week where it just closed near its session low. Distribution in the blue chip index as well. It is now down 142 points. That's about 1.1% to 12,613. Volume today is tracking higher than what we saw Tuesday on the exchanges. Right now, NASDAQ volume tracking about 10 to 15% higher than what we saw yesterday, which was 1.77 billion shares on the NASDAQ. Volume on the New York Stock Exchange tracking about 5 to 10% higher than Tuesday, which was average at 674 million shares. Not much movement in bond yields today. The 10-year note up a smidgen, 1.59%. That's actually might be flat now on the session. The 30-year bond also up just a tiny bit to 2.73%. U.S. dollar index up 7 ticks to 81.01. And let's check in on the UUP here. This is the PowerShares Deutsche Bank U.S. Dollar Index Bullish Fund. Potential resistance here at the 200-day moving average. That 22.27 price level is going to be important to watch because it could be a ceiling. And if the UUP, bumps up against that and consistently gets turned away, that could presage a lower U.S. dollar, which could be the fuel for more money coming in from the sidelines in the stock market. So we'll see how that happens. The dollar is weak today, not very weak, but still weak. Dovish comments today from Federal Reserve Vice Chair Janet Yellen. She signaled her support for holding rates lower for longer, not just 2015, but into 2016. The Fed minutes came out today from the October 24th Fed meeting. The Fed, the minutes showed that there is discussion at the Fed of using thresholds for telling the market when rates will go up. Right now, the Fed language says rates will stay low for an extended period of time, mid 2015, late 2015. Now they're talking about sort of assigning economic data to signal when rates are going to go up. In other words, rates are going to go up if the unemployment rate goes below 7% or something along those lines. So we'll see how that shakes out. The Fed minutes also showed that a number of Fed officials think the Fed will most likely need to buy more assets once its Operation Twist stimulus program wraps up in December. Gold today up $5.30, beneficiary of a weak dollar, settles at $1,730.10 an ounce. Take a look at the GLD, Spider Gold Trust. Here's another example of potential resistance at the 50-day moving average. If the GLD tries to rally but can't get above that 169 price level, keeps getting turned away, that would tell me that lower prices are probably in store for the GLD. So we'll see how that shakes out in coming days. Let's take a look at a couple of gold names under pressure here today. GOLD, this is Randgold Resources, a break below its 50-day moving average recently. Now its 200-day is in play here at 99.98. Big sellers in Randgold today, down 6% to 101.70. So about 2 points above its 200-day moving average. Randgold Resources getting weaker by the day, but this 200-day line could be a long-term level of support for gold. All right, going back to the GLD and this potential resistance at the 50-day moving average, seeing a lot of other stocks out there in the market, not in the gold space, but just growth stocks that are showing suspicious action around former support levels. Let's take a look at Priceline, former big leader here. Shares of Priceline down 1.8% to 619.01. Last trade in Priceline down 1.8%. You can see how it had a nice earnings report, gapped above its 200-day moving average. Actually hits a high close to 660, closes way off its session high. That's been under selling pressure ever since. So this 200-day moving average looks like resistance for now. We'll see if it can firm up at its 50-day around 613. But this is one of several potential short candidates out there. If you want to go short this market, you can short an index ETF like the SH or the PSQ. But when I look at all my screens of growth stocks, certainly the number of short opportunities out there have the upper hand over long opportunities at this point. So Priceline looking very tired here. Possibly could see lower prices for Priceline, and also Under Armour, which has been a big market leader. We'll look at a daily chart first for Under Armour. You can see a break below its 50-day moving average. It broke below its 200-day moving average last week, tried to rally back above it, failed miserably today, down 2.6% today to 49.81. Now, the main thing that Priceline and Under Armour you want to pay attention to here is we'll take a look at a weekly chart for Priceline, and we'll see a stock that has made a monster price moves. This does look like a stock that's in the process of breaking down to me. That's the bottom line with Priceline. Weekly chart provides good perspective. It's made a big move, and in the current consolidation, you can see just a series of lower highs here, and now potential resistance at that 40-week moving average. So Priceline looks like a tired stock, and Under Armour as well, which is ticker UA. We just looked at the daily chart. Under Armour has been a big market winner. You had a base reset back here in 2011, but I would not be surprised at all to see Under Armour eventually pay a visit down to this 42 price level, which would be one of its last breakout areas. But Under Armour currently trading at 49.83, so looking very weak here as well. Thanks very much for tuning in, folks. Always appreciate it. We're headed into our first break. Ken Shreve with you on Breakout Investing, and we will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Well, if you think that damage has been done in the market before today, a lot more damage is being done today as indices are in the throes of a sell-off as we head into the close here. NASDAQ Composite now down 33 points, almost 1.2% to 2850. You see trading near its session low. We'll check in on the S&P 500 as well. We'll see that this benchmark index is also right at its session low, now down 17 points, 1.3% to 1357. And the blue chip index, the Dow Jones, at its session low, down 1.3% to 12,588. I mentioned my Ultimate Growth Stocks model portfolio being 100% cash right now. At this point, I'm just going to wait for signs of a tradable rally, and optimistic that we'll see something between now and the end of the year. But this is a time to be playing defense, and one thing I like to do for my subscribers is protect capital. There's no sense trying to make money in a downtrending market, so we're really at it with a clean slate right now. And you know, if the market continues to act weak. I mentioned there are several short opportunities out there. It's certainly not late. I mean, if you're shorting stocks here, you're definitely not late to the game, because there still are a lot of short setups out there, particularly in these big bull market leaders that have been leading the market higher since March 2009. So I am going to be changing the makeup of the model Ultimate Growth Stocks model portfolio. In that I will be shorting stocks as well. It used to be a long only. Newsletter, but I will be set up to short stocks. So if I see isolated short opportunities, alerts will go out saying that we are shorting this stock at this price, and you can feel free to join me in that trade. So that will be available in the not too distant future. So stay tuned. If you do want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com in the breaking news area in big red letters there. It says try out Ultimate Growth Stocks. You can also find my newsletter tab in the newsletters tab on the homepage. Just click newsletters and then investment newsletters, and you'll find Ultimate Growth Stocks in there. Haven't touched on crude oil. 86.32, up 94 cents is the official settle. That's a 1.1% gain. Oil prices higher on news that Israel bombed the Gaza Strip today, and they killed a key Hamas leader. So tension in the Middle East always brings buyers into the oil market. News late in the day that Starbucks will buy Teavana. Teavana is an IPO from July of last year. It went public at $17 a share. It hit a high of $29.35 in its first few days of trading, then corrected all the way down to $11. So let's check in on Starbucks and see how it is trading on this news. Again, Starbucks is going to acquire Teavana. The deal reportedly is worth $620 million, which values Teavana at $15.50 a share. Starbucks getting hit on the news. It is down 2.3% to 49.14, basically sitting right at its 50-day moving average. And Teavana, its ticker symbol is TEA. Big move for Teavana. It is up 52% to 15.41. So it has been a terrible performer since its IPO in July 2011, but looks like a nice business fit for Starbucks as they expand their product offerings, moving beyond just coffee. Now going to be a big player in the multi-billion-dollar tea market. But Howard Schultz looks like he's getting Teavana at a pretty good value here, because this was a $29 stock at one point. Now, before today was a $10, $11 stock. All right, let's take a look at a couple of very liquid, widely followed ETFs, see how they are faring today in this market downdraft. The XLF, which up until just a few days ago had been holding above support, one of the last ETFs left standing in a market that has been under fairly intense distribution. XLF, though, is in the process of breaking down here. Gave up its 50-day moving average last week. Now it is approaching its 200-day line. Right now, the XLF is down 1.5% to 15.19. Looks like support at 14.96, but we've seen a lot, not only the major averages, but a lot of stocks giving up their 200-day moving averages recently, so wouldn't be surprised to see XLF do that as well. And we'll see the home builders, they were leading the market for some time. A lot of institutional selling in the home builders over the past few weeks. ITB down another 2.9% today to 19.17. It is, looks like, what's that, 7 or 8 straight price declines for the ITB. A lot of big sellers in that fund recently. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. And, rough day for the markets taking shape here. We've got about 25 minutes left to go in Wednesday's session. Stocks near session lows. The Dow down about 158 points or so. And, just a rough market times here. Good to stay out of the way, wait for a new uptrend to take shape. Most importantly, wait for new leaders to take shape, because that process is still going to take a little while to happen, and you have to keep in mind or remember that the leaders of a former bull market are not generally going to be the leaders of a new bull market. Taking a look at Apple, I don't think Apple is going to be a leader going forward. I mean, this is just a complete unequivocal breakdown here. At $537.50 a share, Apple is going to need to rally about 170 points to get back up to its recent high, just over 700. You think if fourth quarter earnings are going to really be good at Apple, which a lot of people are expecting, do you think the stock would be trading like this? I don't think it would be. I think this is a company that's going to face some serious execution problems going forward, and we'll see a dead cat bounce at some point. But this has really just been an unequivocal beatdown in shares of Apple, and really would not expect this to be a stock that will show meaningful leadership going forward. Let's take a look at shares of Facebook. They had a big share lockup release today, and look at what the stock is doing. Maybe a little bit of a counterintuitive move, I don't know, but stock is up 12.4%. Amazing, to 22.33, as almost 800 million shares flooded the market today after an IPO lockup release on December 14th. An additional 156 million shares will also become available for sale. I don't think Facebook is a buy, even though it is outperforming today. Obviously, there's a strong demand for shares out there today, but this is a broken stock that still has a lot more work to do to repair itself technically. So still not a buyer of Facebook here, but impressive performance for the stock today. In related news, Facebook is getting a new employee from Zynga. Dave Wehner was formerly the CFO at Zynga. He resigned, taking a senior level job at Facebook. Chief Accounting Officer Mark Vranish at Zynga is going to retake the CFO helm at Zynga. He was previously the company's finance chief from 2008 to 2010 and oversaw Zynga's IPO. Now, Zynga is a troubled company, shall we say. Let's take a look at a chart of Zynga here, and up 2.6% today to $2.16, but this is not a stock that I will be owning at any time in the near future. We did have quite a bit of economic data out earlier today, Wednesday. Earlier today, retail sales data, a bit disappointing, but some of it was Hurricane Sandy related. Overall sales fell 0.3%. That was a little worse than expectations of a 0.2% decline. And excluding autos, sales were flat, and economists were looking for a 0.1% gain. All right, 877-927-6648. Let's go to Las Vegas, Nevada. Talk to Ken, who wants to talk about Facebook. How you doing today, Ken?
Good, thanks. Thank you, Ken. My question was actually, you covered a little bit about Facebook as far as what's going on. How is this happening on a day that so many shares are released for people to sell? On a day like that is the day that Facebook is up so much.
It is just what I described as a counterintuitive mood, because there was a lot of worrywarts out there with all these shares hitting the market. Would there be enough demand to soak up an incredible amount of supply? And its price performance tells me that there's plenty of demand for the stock today. So, darned if I know. I mean, it doesn't make any sense as indices continue to sell off here, and a market that's under distribution. There are obviously some big buyers out there scooping up Facebook today. So I don't think it means that this stock is ready to start a new uptrend, but basic supply and demand principles in the market are what's driving Facebook today. There's plenty of buyers around, and their sellers are just being overwhelmed with buyers.
Okay.
Yeah.
Well, I just thought maybe there was something that it was just everything just seems so odd with Facebook. And
I mean, when a stock makes a move like this, what you have is a 12.3% move in Facebook. You've got buying orders in the market that are overwhelming sell orders. That's what causes a big price increase like this. Now, the buyers and sellers are always going to be matched up, but throughout the day, buyers have been swamping the market, and it's just causing the price to go up. As sellers, they find sellers to match the buy orders, but buyers are just there's a lot of them out there today, and that's what's causing the price to move. And it doesn't. Sometimes stock moves don't make sense, and it's hard to imagine that Facebook is doing as well as it is on such a a down day for the market. But there are a lot of buyers around today for sure.
All right, thank you very much, sir.
Okay, Ken. All right, thank you.
Bye.
Yeah, I mean that's tough tough to make sense, really. But you've got big volume in Facebook. Volume of over 200 million shares today. So that's very, very heavy for the stock. And when a stock gaps up at the open, for example, what's going on there? You've got so many buy orders, and market makers and specialists are scrambling to find sellers that are willing to sell. Now they're willing to sell if the price is right, and that's what causes prices to go up. I mean, the stock pricing in the market is just basic supply and demand principles. If you go to the market and you want to buy strawberries off season when they are in tight supply, prices are going to be up. Obviously, there's a lot of shares became available for sale from Facebook insiders, and the buyers are just around in spades today. So Facebook making a very, very nice move, and it's hard to explain, but it's happening. Okay, so retail sales data today. Not all that good, but some of it Hurricane Sandy related. I wanted to check in on some other retailers here that could be getting a little long in the tooth. Lululemon, this is another one that, this just really getting hit hard. Possible short candidate here. Not quite yet, but it did break below its 200-day moving average today, down $3.48. 5% to 66.32. Let me see if I have a weekly for Lulu. I save so many weekly charts in my thing, but I don't have one. But I'll tell you what. Let me just go to a chart of Akamai here, and then we'll switch that over to Lulu, and we'll see just another big market winner here that is starting to look a little bit vulnerable. So the fact that it's below its 40-week moving average, if it tries to rally back above that and meets support, then it starts getting interesting as a short, and you could see a pretty quick downdraft to that 50-55 area for Lululemon. So another growth name out here that's looking quite vulnerable. Lulu has not reported earnings yet. They keep a slightly different fiscal cycle. They're going to be coming out with earnings in early December. But Ulta Beauty, which is another well-run retailer here, another huge winner in the 3+ year bull market. Another name looking vulnerable here. Has broken through support here, trading underneath its 40-week moving average. Again, if it tries to rally back and fails, then it starts getting interesting as a short candidate. I would not short it here, but this is another growth name starting to look vulnerable. Stock is, let's see here, switch over to the daily chart for Ulta Beauty, and we'll see that it is down 2.6% today to 87.17, and pretty steep correction since early September. Can't get out of its own way. Confirmed earnings date for Ulta on November 29th. So a lot of retailers looking a bit shaky here. Another retailer looking very shaky. How about Target? Target's going to be reporting earnings Thursday before the open. Again, resistance at the 50-day moving average here, a potential problem for the stock. It fell below the line in October, so you tried to rally back above, failed, started to rally yesterday, closed near a session low, and then the bottom falls out today, down 1.3%. to 61.27, certainly brings a trip down to its 200-day moving average into play at 59.04. But earnings are right around the corner Thursday before the open, right along with Walmart. Both are reporting on the same day. Walmart in some trouble here as well, breaks below its 50-day moving average a couple of weeks ago. Its 200-day line is down around 67. Shares were recently trading around 71.41, down about 0.6% on the day. Tomorrow we've got weekly jobless claims. The consensus estimate calls for a pretty big jump up to 388,000, up 33,000. A lot of that was because the prior week's data was distorted due to Hurricane Sandy. So we'll see how the market reacts to weekly jobless claims tomorrow. Big jump up 33,000 to 388,000. We've got the latest reading on consumer prices. The consumer price index will be out Thursday, and also two pieces of manufacturing data, the Empire Manufacturing and Philly Fed on Thursday as well. We've got fiscal cliff doings this week. President Obama has been busy lobbying business leaders and labor groups ahead of fiscal cliff talks with Congress later this week. Reports are out there that he's proposing $1.6 trillion in new taxes on business, 2 times what was initially proposed last year. That is likely to meet with strong Republican opposition, no doubt about it. We'll see how that plays out. If you own a Toyota Prius, you may want to take it to the dealer. Toyota Motor, ticker TM. Stock is down 1.9% today to 76.36. It is recalling 2.77 million vehicles around the world for a water pump problem and steering shaft defect that may result in faulty steering. Affected models include not only the Prius hybrid, but also the Corolla Wish and a couple of other models. So check with your dealer, make sure you're okay. But this is not good news for Toyota, because last month there was another recall by Toyota when they recalled 7.4 million vehicles for a faulty power window switch that could cause fire. So Toyota under pressure today on that recall news. Let's take a look at Cisco Systems. At last check, it was higher, but we'll see if it's getting pulled down by the market. Yes, it is. Interesting to see these stocks when they break through support levels. You know, Cisco gapped up at the open, hit an intraday high of 18.25, right at its former support levels. Its 50-day, 200-day moving average. It was immediately turned away. Now it is up 82 cents, still up 4.9% on the day to 17.67, but trading all the way down near its session low. So the numbers from Cisco were pretty good. A lot of bad news got priced in pretty quickly in Cisco when it corrected along with the market from September up until yesterday, but the numbers were pretty good. They beat the consensus estimate by 2 cents with profit of 48 cents a share. That was up 12% from a year ago. Sales were up 6% to $11.88 billion. That was slightly above estimates as well. CEO John Chambers said that the U.S. enterprise business is showing signs of life, but he also said that Europe would probably get worse before it gets better. So Cisco Systems, still a stock that is building a base here, nowhere near a buy point as far as I'm concerned. And plus, Cisco is one of these large cap tech names whose best days of growth are behind it, and that's again, when the S&P 500 is up 20% one year, yeah, you may get a little outperformance from Cisco. But when I look at growth stocks for the Ultimate Growth Stocks model portfolio, I want to buy younger companies in the early stages of growth, because that's when the big stock gains or when the share price tends to move the most, when earnings growth is really firing along at a good pace. So not happening anymore at Cisco. Still has its fans, but not the growth that I like to see in a growth stock. All right, headed into the final break, folks. 877-927-6648. Stick with me. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com.
or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. As we head into the close here, indices still at session lows as the selling seems to be accelerating here. Again, typical in a market that's under distribution. I've been treading very, very cautiously with the Ultimate Growth Stocks model portfolio. Don't need to be owning aggressive growth names in an environment like that, especially when a lot of big leaders over the past 3+ years are in the process of breaking down. When market leaders break down, it does eventually usher in new leadership. That's the good news. The question is, we have to, or the issue I should say, is that we just need to let that new leadership set up, and that's gonna take some time, and it's likely we'll see some new leadership out there, which is exciting. But technical damage like this done is going to take a little while to recover from. But we'll see if we can get some sort of little rally between now and the end of the year. It is not out of the question by any means. So right now the Dow down 205 points, 1.6%, 12,551. The S&P 500 down 1.6%, 21 points to 1353. And the NASDAQ down 40 points, 1.4% to 2843. So just like that, the NASDAQ is now, 11%, 12% off its recent high of 31.97. The S&P 500 is getting close to 10% off its recent high of 14.74. So we are in an intermediate term correction here officially, and yeah, technical damage done. It's going to take time to repair. Some downside movers today. Shares of Panera Bread. Quite a bit of pressure today, down 3.2% to 159.54. We'll see if its 200-day moving average here will be a support level. The 200-day line for Panera is right around 156, and I'm glad I took profits in Michael Kors ahead of earnings. I just made the judgment that this was a growth name that it just didn't make sense to own it headed into earnings. I did not have a big cushion in it. It looked like a stock that was getting ready to possibly lead the market higher. But again, market under distribution is gonna take every last stock down with it. The numbers were strong yesterday from Kors, but you could tell its price action yesterday. It hit an intraday high. Over 53.5 thereabouts, but finished near its session low, and it is down 5.7% today to 48.10. Its 200-day moving average down around 45.65. So a lot of these stocks that are basically forming the left side of their bases right now, some are going to bottom and start to retest their former highs over the next several weeks. Those that do are going to be your breakout candidates, and those that do, and they're doing it in good volume, and you're seeing some accumulation on the right side of the base, and fundamentals are supporting the price performance. These are your potential leaders. But again, this process is going to take some time to sort out. Intuitive Surgical getting hit today, down 2.1% to 525.01. This is another former leader that looks vulnerable, as does MasterCard. MasterCard has been showing price strength and, believe it or not, still holding above its 50-day moving average. Has to be one of the few growth names out there that I follow that is still holding above its 50-day line. You can see back in October it found support there, but MasterCard down 1.9% today to 462.40. All right, folks, coming up after the close, I know we've got some earnings reports. Limited Brands, LTD, NetApp, NTAP, PetSmart, PETM, and Williams-Sonoma, WSM, all due to report after the close today. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern, Breakout Investing. Take care, folks.